Trump just returned from a 2-day summit with Chinese President Xi Jinping in Beijing, and the results were more complicated than either the bulls or the bears expected. Here is everything that happened and what it means for your money. Going into the summit, the market had 3 big hopes: an agreement on the Strait of Hormuz, a massive Boeing aircraft order, and eased semiconductor export restrictions that would let Nvidia and other chip companies sell advanced AI chips to Chinese customers again. Here is what actually happened. On the Strait of Hormuz, progress but no resolution. Trump and Xi agreed in principle that the Strait of Hormuz should remain a free and open waterway, and that Iran should not be able to impose tolls or control shipping traffic. Secretary of State Marco Rubio confirmed it. The Chinese side said they are not in favor of militarizing the strait, and that is our position too. That sounds good. But here is the problem. No concrete mechanism was announced for enforcing that position or pressuring Iran to comply. China and the US agreed on a principle. They did not announce an action plan. Oil briefly fell on the news and then climbed back above $105 per barrel when the market realized there was no follow-through. Xi also warned Trump directly that any mishandling of Taiwan could lead to, and these are Xi's words, an extremely dangerous situation. That reminder that the US-China relationship has deep fault lines beyond trade was not lost on investors. On the Boeing deal, a disappointment. Trump announced that China agreed to purchase 200 Boeing aircraft equipped with GE Aerospace engines. He called it a major win and suggested China could ultimately buy as many as 750 planes. The market had expected an order closer to 500 planes in a $77 billion deal. The actual 200 plane commitment was roughly half of what analysts anticipated. Boeing shares fell nearly 3% on the announcement. When the headline sounds positive, but the details disappoint, that is the market telling you something. On semiconductors, hope but no announcement. The most watched story of the summit was Nvidia CEO Jensen Huang joining Trump's business delegation, boarding Air Force One in Alaska in a last-minute move. The market interpreted his presence as a signal that chip export restrictions to China might be eased, allowing Nvidia to sell its most advanced AI processors to Chinese customers again. Nvidia gained 2% on Wednesday when Huang joined the trip. By Friday, no announcement had been made. The hope trade unwound. Nvidia fell 4.4% on Friday, as investors concluded the chip restriction easing they had been pricing in was not coming, at least not yet. On trade broadly, symbolic progress. Trump called the summit fantastic and said a lot of different problems had been resolved. The two sides agreed to continue trade talks at a senior level. Besant and He Lifeng's preliminary meeting in South Korea produced enough goodwill to keep the summit constructive. But no sweeping trade deal was announced. No tariff reductions. No formal framework. The summit maintained the current détente without meaningfully advancing it. So what does all of this mean for your money? The market's verdict was delivered on Friday. The Dow fell 537 points. Tech got hit hard. Oil climbed. Rate hike fears resurfaced. The initial post-summit optimism that sent markets to record highs on Thursday got partially reversed when investors assessed what actually came out of Beijing. Here is the honest assessment. The summit was not a failure. The Hormuz Agreement in principle is meaningful. Diplomatic engagement between the world's 2 largest economies continuing is better than the alternative. And Jensen Huang's seat at the table signals that semiconductor trade is actively being discussed at the highest levels. But it was not the breakthrough the market had priced in. And that gap between expectation and reality drove Friday's sell-off. The most important development coming out of this summit for everyday Americans is that the Iran war, and the oil prices and inflation it is driving, has no clear near-term resolution. Until that changes, whether through a bilateral US-Iran deal, Chinese pressure on Tehran, or a military resolution, elevated oil, elevated inflation, and the threat of Federal Reserve rate hikes remain the dominant backdrop for financial markets. Watch for any follow-up developments on Iran in the coming days. Any signal that China is applying real pressure on Tehran, beyond just stating a position, would be the most significant positive catalyst available right now. Full breakdown on the channel. Please like and subscribe.